So, 1 billion worth of contracts going to expire today. We've got potential stimulus and market cycles. Let's talk about them. So hi, if you're new to the channel, please do subscribe, hit the bell button, like and comment. Also, on the screen we have my Instagram, okay? I'm rubbish at Instagram. Please follow me. Hi. Engage and stuff. I am going to be releasing content every single day on this. I will be doing stories of like what I'm doing on like other networks and stuff. Little videos from now and then. But I'm going to be releasing like stuff from my phone, right? This has got a load of like archived data of my previous job. Now you're probably thinking, a job? I used to travel the world for a job, right? You probably find that hard to believe in terms of I was in the military. I went everywhere. This this photo here is when I was in Kenya. This one was when I was at Lake Louise in Canada. And obviously this one as well, Jordan, Lake Louise again. So I'm going to be releasing little cool things from my phone, essentially, just to kind of show you stuff. Because a lot of people do ask me, what do I do? Well, I'm actually full-time in this space now. What did I used to do? Well, military, and I will go into that in more detail on my Instagram. So please do give me a follow if you want to see some cool shit. But the pressing fact for today is this bad boy. 1 billion in Bitcoin options expire today. 12, 11, 10, 50 is the current price levels that are mainly on. Lots of Bitcoin and Ethereum options expect to expire today. It could lead to volatility, says market expert. Who is an expert these days? Who knows? I personally think that as well. I think there will be a bit of a panic. I had a bit of a bullish pattern yesterday. I want to talk about the chart in a bit, so stick around. Make sure you watch because there's something you need to be aware of on the charts that is very, very important. And that will probably decide the battle whether we act as resistance or if it just rejects us completely and that resistance goes, ha, off you go. Fuck off. I think resistance is probably the more likely option given what the rest of the structure looks like, but that's my personal opinion. Anyways, in terms of all this, there's a lot of like money at play. What does this mean? How does it matter? When you got billions due to expire, it obviously means a closure of position. A lot of these positions are higher, okay? Higher. That's a problem. So if you're a bull, you might be quite hopeful that they may pump the market today and go, oh, we'll end in profit. However, I don't want to burst your bubble too much. The problem that we've got is a lot of those contracts are currently $1,000 above the current market price right now. So are we expecting today, by the time you've watched this video, maybe a bit of volatility? I know I'm a bit late on the uptake, but it's more of a lesson point in terms of keep an eye on these contracts. I personally don't think we're going to make up a $1,000 candle to try and make up some of those options. They can continue going over to the next month if they want to keep it running. But personally, I think people will take money off the table because it is getting to winter. I'm going to talk about that in a minute in terms of what's happening in terms of longevity of the charts, because we're looking at a bit of a trend change, which is vitally important. We need to kind of get a factor in. So when you got this, a big business, they are on Derbit, the largest platform for options contracts by volume is around 57 million worth of contracts each day. They're approximately worth $2 billion yet to expire. That means half will expire come Friday for Ethereum. You know, similar picture with Ethereum. So there's going to be, I think, a massive amount of volatility. But let's move on from that because we've also got this as well. We've got the House Democrats are looking at drafting a new proposal for a $2.4 trillion worth of stimulus checks, which is, I find, fucking mental this close to an election. I think this is absolutely scandalous because it's mental. It really is. The election is literally going to be played out with a load of hopium in the markets, a lot of bullish sentiment. That will probably tweak behaviours of voting, in my opinion, because if people are looking, oh, the stock market's looking good, Donald Trump's done a really good job, it probably will tarnish a little bit of the, you know, we know that social media plays a big factor anyways with all that fake news nonsense. But for me, overall, I think another 2.4 trillion into the market is going to do a lot more harm than good long term. And I don't think people realize this, and people are like, oh, free money. Ooh, who's going to pay that back? Well, me, you, everyone, you know, your dog, your cat. It's going to cause a massive downturn. And when you look in the world, right, if you go for a walk, right, go pause this video, go for a walk, bye, see you later. Go and look at your local area. Look at the businesses. In London, there's a lot of businesses shut down. Certainly where I live, there's a lot of businesses shut down. Normal businesses. This is not going to save those businesses. They've already gone. I don't see the point of it, my personal opinion. So I know there's people's jobs at risk. I know people's lives are on the line, but there's different ways of doing it than just putting money into the economy. We need to affect the people that are really affected, not the people that are like, oh, yay, I'm a big chairman, I'll just win that money. It's all absolute bollocks, realistically. So, finally, let's talk, before I go into the charts, about market cycles, because I know people comment and go, oh, I'm so pessimistic, but markets have cycles. They're called, there's 4 different phases, essentially. You've got accumulation phase, which is where you should be buying, right? When things are like, basically shit, right? When things have gone a bit, think of it like a flower. You know, when you got spring and winter, you know, you got that sort of period where it's like, and then eventually it starts to go, ooh, better sunlight, hello. You know, I know it sounds daft trying to imagine that, but you got to think of this as an investor, right? You got 4 different phases, and this is the simple terms of it, right? You got accumulation phase where it's like, boom, right? You've then got the markup phase where it goes, boom, hello. Then you've got the distribution phase where it starts to top and turn. And then you've got the simple lines of it's dying, right? And I'll do a little example in the chat in a second. But I want to make sure you understand this, because a lot of people are buying into coins beyond markup phase. To get in, accumulation and the start of the markup phase is key, dependent on your time frame that you use, dependent on how much research you've done, and most importantly, what you use as a mechanism to get in, whether you're using a retracement with a Fibonacci tool, whether you're using the likes of an EMA crossover, which is kind of a long-standing kind of obvious one. But too many people are buying at distribution phases when it's starting to top out, and it's like, ooh, when you see like a little snow cliff kind of going on, and then eventually people start panicking. So this is what it looks like, right? Simple. A little market cycle. And markets go up and down, and people don't realize that. We're going to start seeing a little bit of a feathering of the dust if stimulus happens again. Why? It's going to delay certain things with distribution phase, in my opinion. We've had accumulation, we've had a markup, we've had an absolute boom, basically. Boom cycle. Boom. We're starting to turn around. Even the stock market, we're starting to turn around. We'll go over it in a minute. But when things start turning down, and it starts lagging down, and it, it's showing a series of lower lows, lower highs sequence all the way down. That is why I mentioned yesterday, do not buy the dip in that phase. Just wait, chill out, wait, just wait, because you're waiting for the next accumulation phase. You're not waiting long enough. People are buying the dip. Like, there's so many influencers going, buy the dip. Bitcoins went from 12,500 down to 12 grand. Buy the dip. Fuck off. Boom. Honestly, right? It frustrates me when I see it, because it's like, it isn't a dip. You cannot say that is a dip. You should already, 1, be positioned. 2, you should be looking at the chart and not sending people blind. If you see something that went up about 600% in a matter of 4 or 5 weeks, and you're telling people to buy the dip because it could go higher, well, you're not giving people the appropriate knowledge to do that, in my opinion. And I'm not even a financial advisor. I'm just a YouTuber. It's just common sense, right? If you're telling people to buy a 600% risen, a 1,000% risen, a 2,000% risen coin because you've got a bag, well, be careful who you follow. Simple as that. And I know I'm a bit of a pain in the ass telling you that. But let's talk about the chart, because the reason why I want to talk about this now is because this is what the Bitcoin chart looks like, okay? To me, as it stands at the time of recording, biases change as well, all right? It is looking more bearish than bullish. Simple. Throughout August to now, that is bearish. And people are like, what? But this person said this person said that. Just look at the chart. Look at the daily chart and look at what you're seeing. You've got a potential top. Now, you don't know if this is going to carry on. People are going buy the dip at these points, right? But when you look at the RSI, you've got a divergence there. That is rule number one. Do not buy the dip if there's a divergence because it's going to throw you off. Number two, we've not corrected this entire move properly yet. Swing low, swing high. 0.382 is 9k. In my opinion, that is your dip buying point. If you were in this position from like say 5k, 6k, whatever, and you've risen it all the way up and you took profit to like 11, 10, 12k, whatever, you should be looking to buy in lower than 9k. That's just the golden rule. Even if you sold here and you're like, oh, 10.5, fuck it, I'm out, right? Cool. Well done, congratulations, you've took profit. But these contract expiries are going to create volatility. What could probably happen more than anything? One, we've got a structure there of a formation of lower highs. We've got a micro bullish trend here where it tried to pop up, it rejected, formed another lower high, funny enough. We've popped back down, we've not formed a lower low yet, okay? But when you look at this current structure, impulse down, back up, 618 on the nose. That is strong confluence between resistance and market level structure. If I put my cursor on this level here where it stopped, we've got this level here. And if I keep going along, I'll probably find even more. There you go. Just about roughly price action. Look at where these levels have kind of stopped and turned around. These wicks. I know it's hard to see. I'll try and zoom in if I can. There you go. These levels here, look at it. Resistance, resistance, resistance. It's vitally important we understand that. Now, that is just probability. That's how trading is. Probability. People go, oh, well, no one knows what's going to happen. No, but you got to put the odds in your favour. That's how you win. The odds are, personally, as it stands right now in the daily time frame, are in the favour of the bears. That's just there. So when you got contract expiries much higher, i.e. 11k, 11.5, and up to 12k, probability would say we need a $1,000 candle now, right now, to try and match up those levels. I don't think that's going to happen, but I could be wrong. This could, and as I say, this has formed a trend. It went up to resistance. In my opinion, this could be a formation of, I know this is a 618 as well, this level, but we rejected, we're starting to turn around. In my opinion, one thing that could happen, we could retest this 11.3 level, right? But I don't think that will happen in one day. It could happen, I know it could happen, but for me, even if that does happen, it rejects here. We've got a lot of resistance here. We're still forming a lower high. Simple. So that's that, right? Personal opinion. I think we are going to correct a lot more than what your favorite influencer is going to say. I just got a feeling that when you look back at time and look at how things go up and then back down and up and then sideways and up again, obviously. But when you look at like how we kind of move in patterns and waves and how it all kind of goes about, this was like 2019 up to 14k, went all the way back down to 3k. It's just one of those things. So you just got to be careful and obviously who to listen to and stuff like that. But you obviously must do your own stuff yourself. But if I look overall, the market, there's some coins that are doing well, some coins are not. It's all about probability. When you look at Bitcoin, it's not looking great. For a bull, it's not looking good. It's looking likely. In my opinion, I think that the lower we go, the better the options are for a potential move up from those levels. And it needs to properly correct. When you look at Ethereum as well, the same elements happened here. We've got a massive top level here. We've got a lower high, lower low this time. And we've went all the way to the 50% and we've kind of just died again, right? That's kind of obvious. But when you look at the likes of the dominance, we're starting to trickle back up again. That's key. Understand that. When you look at the DJI, even though this stimulus kind of options are coming, the Dow Jones is still dying. Look at that. It's like even this morning futures, 140 points down so far. The dollar, it's going upwards. That would indicate bearish for Bitcoin, bearish for the likes of gold and stuff like that because the dollar is gaining strength. However, if a stimulus check does come, that's going to get weaker. Simple analysis. But when you look at all the other charts all around us, it's telling us one thing. Markets are starting to turn, right? It happens. Corrections, whatever. It just depends on how far low we go and how much panic there is. That is an obvious kind of trend going upwards now. Cool, happy days. But we've just got to be very, very careful and understand certain things. So overall, today's video is done. I know. Looking at gold. But let me just finish on one note. Sorry, Link. Chainlink people. Let's just look at Chainlink. The reason why I want to do this, where's me bloody Binance chat? For fuck's sake, man. There we go. So looking at this, right? This is like boom, right? This is the perfect market cycle kind of situation where you've got, you've technically got accumulation phase down here, COVID crash, markup, obviously boom cycle, and then obviously you've got distribution up here, and then you've got markdown where it's like it's in a trend, lower low, lower high, lower low, lower high, lower low. We'll get to what's going to happen here. Rejection potentially of that level, cool, happy days. Went into the take profit zones, obviously, and starting to come back down. This is all due to Fibonacci levels, okay? It's all psychological. In my honest opinion, I think this is going to go lower. I know people don't like hearing that, but when you look at the overall chart and you look at this, for example, look at this for like potential area starting to move down to here, went right up to that 50% level, turned around, right? In my opinion, it wouldn't shock me in the slightest if this is another trade coming off now, and we're going to go down to at least $5. I know people don't want to hear that and like, oh, you're so bearish, but that's just the way the trend is going. It's going to find somewhere to go, and that is on confluence levels with the weekly level. So yeah, it's just basic rules and what I follow essentially. Obviously, everyone trades differently, but for me, I think that is another formation. It's going to carry on going down. This is the next level. If you want to do a trade, that's not a bad little trade to be on the EMA rejection in and around this level. You're kind of going to be bearish for a bit. You're going to get to this level at $8, $9. You're going to start thinking, well, if it gets to that point, I'll start moving my stop loss down to protect it. Break even trade, happy days. And if it goes down to this level, take profits, whatever. It's a weekend. Have a good weekend. See you later.